If I look around financial markets at the moment, I think it's interesting. We are starting to see some early signs of risk aversion kicking back into markets. Certainly in the currency markets, we're seeing some outperformance in the Japanese yen. We're starting to see a little bit of short covering in the Swiss franc, specifically against certain high beta currencies. And I think that's something to keep an eye on as we go forward. Certainly the dollar yen has come under strong pressure as we've seen that dollar weakness kicking in. And a large amount of that has been driven by the bid that we're seeing in the back end of the US fixed income again. Again, another classic sign that people are quite getting somewhat more concerned about the outlook here, and that's something to keep an eye on, specifically if we see that 10-year US Treasury breaking the sort of 222 mark, getting down and potentially even suggestive that we could even go back down to 2% at some stage. So that's definitely one to keep an eye on as we go forward. What I think is interesting is the yield curves, specifically in the US, of the 5 to 30-year part of the curve are starting to flatten quite nicely again. The US German Bund yield curve is flattening. That is the same in Australia. We're seeing a flattening of that, an outperformance from the long end of the curve, and that's something that we definitely need to keep an eye on. We're seeing central banks turning somewhat less hawkish. I think there's been a propensity to move away from where we've been with this fairly upbeat commentary recently, and I think that's also moving fixed income and currency markets quite closely. US equities haven't moved at all, and I think that's what we've been seeing over the last 13 sessions. The S&P has closed in a 7 or 8 point range, which is absolutely one of the lowest percentage change close we've seen in years, and I think that could change. I think we might start seeing a bit more volatility playing in, so we are starting to see some signs of risk aversion. Maybe that's largely down to political situation, a pick-up in geopolitical concerns on the North Korean peninsula. But for us here in Australia, I think as we go into the new week, we're going to be looking very closely at overseas issues that I said there. We're going to be having a look at what's been happening. Philip Lowe speaks this week. We've got Christopher Kent speaking this week. We're going to learn anything new from that situation. But I think earnings are going to play a big part. And specifically, I think you have to look at SPI futures. We've been trading in this 5,800, 5,600 range for about, since May. Can we break out of that range? And specifically, a weekly close below 5,600 would be a significantly bearish development in my mind. Now, we do have a number of companies reporting. It's not huge, but we do have a number of key companies coming out with numbers. Transurban, AGL come out with numbers. Of course, Commonwealth Bank are going to be coming out with numbers where we're expecting net income, net adjusted profit to be around about $9.81 billion. You're looking for a dividend of about $4.23. You're looking for that return on equity just under 16%, and they should see this all on nicely on revenue of about $25.8 billion. So with all the PR that's in the mix at the moment, with what we've been seeing, some of these scandals, they will want to come out with good earnings. Otherwise, we are going to see the stock down and the banking sector down, and the SPI will push down to 5,600. Of course, car sales is another one that we like at the moment, and that's been coming out with some good rhetoric in terms of putting their pricing up for cars that are sold at different prices. We like that business. I think it's huge return on equities of about 44%. You should see some decent net earnings, about $367 million. So I think this is a really good stock to own, in my opinion. If we get some disappointment from earnings, I think I'd be looking to use that as a buying opportunity. But certainly some big names. Cochlear as well in the healthcare space. That's been the poster boy of all things negative in the Australian dollar, where we've seen that stock dropping from 160 down to 140 bucks. They'll come out with numbers there as well, and it will be interesting to hear what they have to say about the impact the Aussie dollar's played on their business as well. So I think earnings are going to play much more of a part this week. It's not just about what's happening on global macro. I think CBA's earnings are going to be right at the mix of that number there, and that could drive the index into those levels I talked about.